Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. So Bitcoin getting a little bit of a rejection off the point of control here at that 786 retracement level it went to on Wednesday before retracing down a little bit on Thursday, but essentially staying in this consolidation channel, if you will. We came down to go up, to go down, to go up. We're just range bound in this channel so far, but staying beneath this point of control at 51,840. Also, you're bouncing off the 50,948 region, which is what exactly? If we go over to the left here and look over here to the left, this is a point of control from this range over here from 2021 in December. So if we break down from this range, then we're coming back down to test lower prices. If we flip this into support, we can come up into these regions. So that is why we are holding the range, attempting to flip or give the perception of flipping things into support over here. Personally, I think that it would be best if the price comes down and retests some of the levels down here at 49 and sweeps some of the longs off the table, particularly high leverage ones that are still open. What do we mean by high leverage longs? Well, we look at the liquidity as people lock their liquidity in the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are. It says in the past 24 hours, 51,157 traders were liquidated. The total liquidation comes in at 123 million in the last 24 hours. The majority on the altcoins as people take their profits and squander them away gambling in the alts. BTC 12 million in shorts, 11 million in longs, and ETH 13 million in longs, 18 million in shorts. In the last 12 hours, more shorts than longs, more shorts than longs. In the last 4 hours, a lot more longs than shorts, getting as things retrace back down. In the last hour, a little bit more squeezing on the shorts.
Fatality.
As we look into the heat map of where stuff is. So up in this 52.2 region, we have 205 million up here at 52.2 on the 3-day time frame. If we expand our vision to the higher time frame of the heat map, you can see, yes, there is a $398 million pool up at 52,253. However, you have 497 million down at 50,442, 587 million at 50,351, and 442,520. You get the point. There's at least $1.5 billion down in that 49.50K region. So does that dead weight become the draw on liquidity as they come back into this candle at that 50K mark, sweeping all the longs off the table from the last month of this February 14th breakout zone? If you go to the 3-month level, you also see this is 1.17 billion at 50,501. We have 581 at 52,249. Can they muster the strength to go get it? Looks like the draw might be to the downside. Remember, we have this gap down at 49.4, so unless it holds that level with a huge order block level defending these positions, then you could be coming down to some billions down below too. All right, so eventually when it shifts and it leaves some guys on the table like this 1.12 billion and all their brethren down here at 37 when they came around and shifted it to the upside at 38.8, and we were here for it then and we're here for it now. If we go ahead and look at the liquidity in a different perspective, you see there's a larger amount right here in the immediate vicinity down to 50,008, high leverage in orange. You have, of course, some up here at the 51.8 region, but 50 million to go equidistant, or you go here and get 152. So it looks like it's the draw to the downside on the daily time frame. Going to the weekly. The weekly has a large amount above, but a lot of low leverage people up here at that 53,888 region, and you have more stacked up below at that 49K. So ultimately all things kind of pointing to that 49K. And what were we looking at yesterday? Well, we were kind of doing somewhat similar analysis, even though we were range bound we held the line of what we were talking about back here, basically coming lower from where we said it would. It did come down about 2% if you locked in your gains, which you should do, and possibly knocked you out in profit. So if you were up here from the 786 retracement level that we were also looking at the day prior to that, here at that 52,497 rejection, you could still be in it to win it. All right, so let's go reassess everything in a nutshell and throw on the momentum. The math is still doing the math things, and we can see where it would go if we measure this impulse from here to here and basically turn this into a pocket. We have this pocket region down here, that 46,408 at the 2 deviation level is down in this region. So if we ultimately break down into that region, that would make a nice golden pocket reaction off of 46,679 perhaps, if it is going to truly make a retrace. How do we assess that? Well, we throw on the momentum, link in the description for more, momentummaster.info. Scroll down to features, you can see Bitcoin at its bottom at November 2022 before we knew it was a bottom, with the rocket ships and all the oversold timeframes of the stochastic array over 7 time frames of information, 32 different indicator values, trend cloud, baselines, dynamic alerts to your phone, and more. All up to you to take a look and a gander at keeping yourself plugged into the markets with alerts to your phone, so you don't need a guru or furu who charges $100 a month to basically fund their vacation and not take trades. All right, so if you look at their cross down event of the baselines on the daily, this is also what we were looking at for a potential draw to the downside as we rejected the point of control. This daily cross down event of the baselines was the last cross up was back here in January with the cross up event January 27th, and then the rest was history with momentum to the upside. Yes, you do have fake outs, cross up, cross down, cross up, but if you trust them as they appear, they do provide within the context and the framework. Here's a cross down and it played out for days. So the daily cross down events are good to look at, and previously we were looking at a 3-day cross down event back here in December, which was why when it came up to that 48K, we were looking for that idea of a retracement, which came ultimately down to that 38K region. It was a 21% correction. But even if you just took it from face value at that cross down event, that was an 11% correction. So these do play out. Now we are getting this cross up event as we see the 3-day come into fruition. One thing to note is that we're at a key level of ascension here on the 3-day time frame candles. So if this is going to be a pivotal point, this is where we would potentially see a pullback. We didn't see that here. We saw another sequence underway, so there's 2 of these pivot points that are playing out. So the second one might be the one to pull back on the 3-day. If we look at the 3-day, which is closing in a day's time, end of Friday, you have this money flow flowing back up to the RSI here, trying to meet each other at even Steven levels while going sideways. You're overbought on the stochastic and the Williams is overbought. The average on the Williams could still hold the line here as it did in November, as the average comes up to itself and it starts to attempt to cross down. If you have a sudden Bart Simpson type play, then this can cross it, but generally it holds the line on the 3-day with a slow drip up. Okay, here's an example where it took a while to go up and then eventually crossed and then pooped the bed on that in July. All right, let's go back to the daily time frame and make our descent properly through the time frames. Shout out to everyone here. Let's see if anyone is watching. Got one beautiful soul on the live. All right, so coming through to the daily time frame cross down event with the rejection up the 786 retracement of this burst to the upside, getting the reset of the stochastic and the Williams getting an alarm cross signal. As that alarm crosses Do we see some acceleration down into this 49.4618 deviation level of the impulse? Let's find out as we go deeper into the time frames. 22-hour already possibly crossed down. Why do I use the 22? Well, it is a broken time frame and co-opted by some major influencers now by watching it hold true by yours truly, as it resets the stochastic faster than the daily, so you can get in these pockets similar to here where it gets oversold on February 6th and then boom to the upside. Also, this disparity of the money flow beneath the RSI came back to the RSI. Are we getting into the thing happening again here on the money flow coming beneath the RSI? Do we get an insertion of money on the 22-hour time frame? Don't want to be too one-sided in our approach here, so looking once again here at the 3-day time frame, you do have liquidity up in that 52.2 region, 205 million up in that 52.2, and some more up at 148. So if you do have a 52.2 burst, you could still get a burst up in London to possibly take it out. We don't have any news today, so today is a run for profit Friday without any news. Yesterday was the last news day, high impact news for the week. So looking at the 12-hour, the cloud is still pushing to that 2 o'clock angle, very strong momentum to the upside, starting to taper ever so slightly on this 12-hour time frame. Does it continue in this tapering manner like this and start to taper off at 3 o'clock? That would only happen if it starts to break down here and then comes back for this cloud kiss idea at 49.4. Super trend also at 4.56% away over here, which is a strong confluence for a bounce at that 49.4 region if we do get there. Coming to the oscillator, again, the money flow beneath the RSI suggestive of a eventual insertion of money as the Williams attempts to suppress the stochastic takeoff of the 12-hour time frame. Coming to the 6-hour time frame is coming a little bit lower here, as you see the Williams is going and suppressing this takeoff. This is what you mean by suppression. The stochastic trying to take off, failing. Why? Well, the Williams is resetting and pushing this down. Money flow beneath the RSI also suggestive of an eventual money insertion. However, we're on the 6-hour cloud. We're looking at this idea of this cloud correction of the angle here. Is it going to shift? And we are breaking down beneath the cloud. Attempted to get back above, rejecting. So we're beneath the 6-hour cloud. I always say trade with the cloud, whether it's looking like this or like this. It doesn't matter the direction, you trade with the cloud for higher probability. Coming to the 4-hour, and this is what is here. If you look at the trend cloud, you can see when we get above the cloud, boom, continuation, boom, and same reversing beneath the cloud, boom, beneath the cloud, boom, beneath the cloud, boom. So you trade with the direction of the trend cloud on no matter the time frame. And so we came to the super trend, the last line of defense, bounced off of it at 50,698, and that super trend held. But the more times we hit this, the more it weakens, and we're seeing this shift on the 4-hour too. 4-hour is kind of holding in this strange, it's not exactly curving at that angle, but it's getting in a similar fashion here. So on the 4-hour time frame, which is going to close in 2 hours 21 minutes, do we get this push up to close strong back above the point of control, or are we going to see this come down and sweep these lows one more time? Williams getting a hard reset on this. By the looks of it, the MACD has crossed down, attempting to cross back up, but potentially fading off of that with the Williams reset of the 4-hour takeoff. Do we get this follow through to the downside? The last 4 hours closed out pretty bearish. If we look at that on the daily close, which is where it closed out in a daily close candle, which was ultimately bearish. Going to the hourly. Okay, hourly meandering around here on the cloud, ambiguous as we go range bound, and you can look for your sniper entries using that cross up event if it's at a key level you're looking at on a higher time frame, or mathematically speaking. Williams coming down here on the hourly and possibly getting a reset in full on the hourly as well. Tempting to hold this hourly cloud though, so is there some hope for a potential to burst up and see what it wants to do on this, give the hourly its credence, its due if you will, to see if it will come up to a level here. 15-minute also starts to get into the nitty-gritty, as you see these smaller time frame plays have smaller oscillations that have less weight when they come back and kiss the cloud. Still bounces off the cloud though, for what it's worth. We were looking at a toss, so we're going to go log into that real quick and see what is going on with that. As that loads, we're going to go look at the USDT dominance and all the other facets of the market. So we were looking at the USDT cross-up event. This cross-up is inverse to BTC in the sense that when USDT dominance goes up, Bitcoin goes down. So if you invert it and you see it going like this, then that means basically if it's going up, Bitcoin is going down. Are we going to get a cross-up event of the daily time frame and come back into some resistance levels? This would coincide with the 50K retrace idea. Total 3 also getting the cross down event of the baselines here. Are we going to get a kiss to the cloud? 706 access denied or granted retest of the trend-based fibs that we've had price trapped in for some time. Coming to total 1, also getting the cross down of the daily. It's all about, does this accelerate in a manner to test support on these wicks over here from January 11th. That's it in a nutshell. Coming to the Dixie. Dixie came down to the key support zone at 103.59 and 103.58 and wicked off of these points of control from back here in this range. Do we start to see a little bit of reclaiming of some of these highs? We broke the super trend on the 6 hour. It's not a one-to-one correlation on the dollar anymore, so you could be seeing this flip, this WMA and adaptive EMA, and this super trend still holding. We do have this cross down event of the daily time frame still in play as we get the price suppressed by the baselines. On Dixie, let's go to a lower time frame like the 12, see where it's starting to potentially change. Still has the cross down event strong in effect. 6 hour attempting to try to push up here. We broke the super trend on the bullish narrative here, which was holding since December 29th. So we broke that 6 hour super trend, so we are in a bearish pullback as we break structure and came into this candle. This candle is a 50% retracement level of this 60. So we came right back to that 50% mark here and bounced off it. That is still kind of bullish because we maintained this candle as a support structure to potentially go higher. So are we going to retrace back into this a little bit and then start making our way back up to these highs? If the dollar does come up, then it will put things in a paralysis. Risk on assets like Bitcoin NQ will see a bit of a pullback. NQ still getting strong as it came off of that 2.7 deviation of this impulse. And this is also coming into the Nvidia news, which far exceeded expectations. You have to know the context for why is it going up. It's not just random, it's the AI boom, Sora and all these chips proving to be the lifeblood of the marketplace these days. So do we start to put in higher highs? 18,121, we could very well see it today for the run for profit Friday to the upside, where people cash out their longs up in higher highs. ES also doing very much the same as you come into some Fibonacci levels at the 2 level 51,105. We wicked off it. This is a deviation level of this impulse retrace of the 236 that's been holding for some time now. So do we come up to a higher deviation? We could basically erase this Fibonacci and try to do a other impulse here. Let's try to go into a smaller time frame. Okay, so what we can do here is, so we had a trend-based fib, so we went up here and then we came down to here on a 15-minute. So this kind of gives you a level. This is one within a small structure. Very bullish. They did the stop hunt, came back, and they were gone off that cloud. That cloud kiss works on all assets. This whole shifting of the cloud came back to that cloud, and boom, you were gone off that cloud right there. That wick, boom, off the cloud. All right, so still bullish, holding this super trend, not showing signs of abating. It has a mission: don't stand in front of a train as it's going to the upside. So Bitcoin still holding the range. People offloading or playing in the alts, I guess. What is the alt game doing? Crypto bubbles. So you're getting, what is this? Starknet, Axelar, HBAR, Python, Render, Philcoin, Woo, Wild, WorldCoin, Chiliz, Flow, and Mantle. So a bunch on the week. You got AGIX, Wild, Siacoin, Render, and more as the degens play in their sandbox of low liquidity coins. All right, so if we go to in a nutshell, let's see what we want to do in a nutshell. So in the nutshell, we just look at things from the cross down perspective and the point of control, volume nodes, and all this cross down event of the 12 and the 22 and the daily, looking to see if this can retrace back into some key levels here. Does it come back into this zone and start to reclaim? You have the thin print zone where we broke away here and we wicked off this area over here, and we've done double wick, so the third time's a charm to break this and reclaim some of the liquidity below. What is the liquidity? Once again, you have some down here in that 50K region. We already ascertained what that looks like. Doesn't look like it on the 3-day, but if you start to expand your vision to the higher time frame, you start to see, oh wait, there's 1.17 billion down at 50,005 and even more down here at 50,001. Okay, there's like $2 billion down there, I see. And then it starts to make sense why there would be a draw, despite there being shorts opened. So the open interest is also not there. If you see the open interest dropping like this and the longs dropping, there's no long interest in this zone. There's more shorts getting opened here, but eventually they have to reward one side and start punishing the other. So is this the pivotal moment for the Run for Profit Friday to do one last hurrah? Does the bearish super trend 1.5% away at 52.1 hold or not? So do we get one last hurrah and then head on down to the downside? That is the question. As of right now, you're holding the hourly cloud, but once again, we walked over how the 4-hour and the 6-hour clouds are creating this curvature that could be the resistance that we need to head on down to this level. And that's my story, and I'm sticking to it, folks. Do you think there's a current trend is down? There's a possibility of falling. There's a possibility of everything, my friend. But yes, as we went over, the weight of the higher time frames is the weight that we look for here, this cross down event of the baselines. You can read about it over here. Go to momentummaster.info, read about the baselines. They're your first sign of reversal, one of the few leading moving average formulas on the market. We are looking at it in here at Saturday, January 27th, as we started to make our way up. So the daily time frame baselines were holding as we saw this whole move, and now they're starting to fail and prices beneath them. So that is one of the concerning things which is causing me to think about this idea. okay, above others. And that's my story, and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same, bring the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.